This is your investment update for May 2018. So good domestic markets last month. The S&P is up 2.4% and domestic bonds are up about 0.7%. On the flip side, European stocks were down, or only up about 0.2%, but the bond market there was down 0.8%. And we'll talk about that in a minute. So it's kind of the opposite of what's been happening for the last, call it 18 months, where you've had a really strong global bond market with just a decent domestic bond market. This year, both bond markets are down for the year, and theirs is kind of catching up to ours on the downside. That is because in the last week of May, you had an election in Italy that didn't go very well, and they're worried that the new party that's going to probably be put into power is going to be in favor of an Italian exit from the Eurozone, which would not be a good thing. The Eurozone is very invested in having Italy a part of it, particularly for countries like Germany. Italy's heavily indebted and has a lot of effect on their banking system. And so that in one day, we had like a 0.3% move down in the 10-year Treasury, which is a monster move. It's a huge move, and you had spreads in the bond markets there widening. It's since calmed down, but nothing's changed there. So we wrote a bunch of letters in 2009, 2010 talking about all the debt in the periphery of the European Union. In 2012, Mario Draghi of the ECB came out and made a famous speech where he said the ECB will do basically anything to save the euro. And as we've learned with our own central bank, words can go a long way. So we've had the last 7 years where they haven't fixed any of the problems. The banks there are still in really bad shape, and the debt situation there is still kind of the same, if not worse. But the ECB's been involved buying all these assets and kind of propping up the market. Well, they've since said they're going to wind down their QE program like our government's done, and now you're having some banking issues there. So these are just kind of chickens coming home to roost in European, but it has implications for global markets as we saw in May. So we kind of expect that to maybe continue to add to some volatility that we have. And our Fed is looking to raise rates again in 3 weeks, so that'll affect that as well. So that's just something we're watching and was the source of some of the volatility in the last week of May that you saw.